due to COVID restrictions, we've had a harder time getting supply in. And our sell through is as vibrant as ever. But that all started changing in December. So, November, we had a good supply month. November, December, we started seeing growth in demand. And we also are seeing it in January and February. Again, all of ours, because we're not a manufacturer, we're reliant on getting things from people's homes. It's been very challenging in COVID times, coupled with early on, California shut down our warehouse in Brisbane, which had, a long-term impact because we couldn't pick up units and we couldn't process them in the state of California. Having said that, that was last year. We're already seeing signs of recovery. Starting January was great. February month to date were great. So year to date, we're up 14% in GMV, and we expect to continue for stronger growth in the future.
So if it's more of a supply issue, then what does supply look like for the year ahead?
Well, it started changing again last year, mostly driven by adding our neighborhood stores where people felt very comfortable dropping off. Prior to COVID, most of our supply came from us visiting your home and going into your home. Clearly, that wasn't the best option, and an option many people didn't want during the COVID times. However, people were very comfortable dropping off at stores. So we started introducing neighborhood stores to complement our flagship stores, and it helped drive supply up by about 13%. And it's growing now even more. This quarter, it's grown even more. Year to date, we haven't given out that number, but the growth is there. It's real. We've supplemented that with more vendor product, some vendor product, but still the primary growth in our supply is people feeling very comfortable with dropping off at stores.
So, and our interview, you were on the show, one of the last interviews before lockdown. We were at your store in San Francisco. It was, a wonderful experience, and obviously so much has changed since then. But you drive by, I see a line out the door all the time. Talk to us about how your physical stores are doing and how you see that contributing to the growth in the future.
So you're absolutely right. I mean, we are adhering to all COVID restrictions. So we have restricted number of people in the stores. We opened a Palo Alto neighborhood store, which only allows 4 to 6 people in at a time. So you can tell it's really constricted. Having said that, the stores are really bouncing back, primarily for supply, secondarily for demand. But I was in New York over the weekend, and I had a driver. I went into our new Brooklyn store, which was incredible. But I had a driver on Saturday take me past our stores in Soho, Brooklyn, and on Madison, and we had lines out the door. So can you imagine once restrictions lift, people are waiting out. It was about 28 degrees. They're waiting out in the cold to go into the store to either consign or buy. I can't wait for restrictions to ease because I think we're just going to skyrocket. And we've announced by the end of June, we'll have 10 more total new stores open that are more neighborhood focused, which we expect to do very well.
So then what is your outlook on demand? Because, obviously, people love buying, as I said, luxury, beautiful things. But if it is a luxury and people are struggling and many people have lost their jobs, how much disposable income are people going to have to spend on something that they might find at the RealReal?
Well, I mean, there's the facts are in. We had 21% new buyers in Q4 year on year. And the truth is we're still a value versus full price. So when you look at it versus the value shopper, we're still attracting the value shopper. It's an amazing deal and people can resell it. So if people do buy things, they already know the resale value. So in that ways, it's an investment. We saw a very interesting trend during COVID where people were investing in more handbags, fine jewelry, and watches, more so than any other categories. Those categories were up. Now, what we are now seeing, which is positive for us because it's the single largest category, apparel is back. Apparel is back to growing. So, I hear what you're saying. It's, there are hard economic times. On the other hand, there's still a large population that do have jobs, and they're value conscious, and they're also environmentally conscious. So the combination, I believe, is really going to suit us well. Again, as restrictions ease, and we're already seeing it as they've eased, we expect our business to really take off.
You've done this partnership with Gucci. I know we're coming up on your 10-year anniversary. Let's take it a year out from now, with the development of these new physical stores. How does the RealReal look different, let's say, a year from now?
The last time we met, literally 2 days later, we had to shut everything down for weeks. So I don't want to go too far out in the future, because if you would have asked me, we had a pandemic and it would completely sideline our 40% growth that we were having in Q1 prior to the pandemic, I wouldn't have believed you. But I can tell you, we exited 2020 with many more options than we had going into 2020. What I mean by that is neighborhood stores aren't going to go away. In fact, we're sort of revitalizing retail in the neighborhoods we come into. The only other store that has as much action wherever we are is the Apple store. So neighborhood stores, I believe, are here to stay. Virtual appointments are here to stay for us. And I could go on. I also, at some point, we're going to be international, and that point is, probably, I would say 2022 is our year of international also. So I just feel like the year gave us gifts that we wouldn't have wanted to go through what we did in 2020, because it was a really hard year on us more than other businesses, but we've come out of it stronger with more avenues for growth.